You keep saying Bitcoin has rules, but no rulers. And it is really fascinating to understand what that means. So what Bitcoin does, in my opinion, to achieve that, it harmonizes human nature with the natural world, with the physical laws of nature. And this is really interesting to understand. So what do you think is the key issue with having centralized parties in between? So why is that a problem that have to be solved?
So first of all, it's inefficient. Every technology which is at least 10 times better or faster or cheaper is overriding the former technology, and which is clearly the case with Bitcoin, because you easily, without 4 or 6 correspondence banks necessary, every bank cutting their small share out of the transaction, ending up with like 100 basis points, more or less, give or take, in the transaction, including currency conversion, etc., all in there. And with Bitcoin, you can transact within minutes or even seconds with Lightning all over the world, almost any amount that you can or want to send, right? This is more than 10 times better. It's also 10 times cheaper because, for instance, with a Lightning, you only pay not even a couple of cents. It's below $1 cent. And the thing is, you can, for only a bit more, like depending on the network fees, but for $1, let's say $3 at a maximum, you can send a mainnet transaction everywhere in the world. It's completely settled immediately, and it doesn't matter whether you send $1 or $1 billion in worth. And this is why it's 10 times better.
Okay, so that's the economic benefit, but you always talk about this apolitical nature as well. So if you establish rulers in a system, you always have the risk that there are also political ideas that are not in the interest of everybody, right? So that's another issue that's definitely solved with the Bitcoin peer-to-peer network.
Yes, exactly. So the political component and there's the corruption component, right? With corruption, I mean any centralized party or player, by definition, is in a position that it could be manipulated or even corrupted by any outer influence. Okay, it could be any influence. You choose the examples here, right? But it could be anything. And what I'm trying to say is there's a single point of failure. If you have a centralized party, there's always a single point of failure. And even if there's a large and trustworthy company, like we all trust banks, so in some form, usually we have still some fiat accounts, etc. Most of us at least have. And you have to trust them. But obviously, latest by the financial crisis of 2007 or 2008, you certainly know, okay, there is strong incentives in the market. There are strong incentives which hasn't been fixed so far. It is still vulnerable to exogenous shocks. And the larger the players, hence the name too big to fail, the larger the players, the more systemic risk.
Yeah, definitely. And it would be interesting to understand a little bit more about proof of work and how it facilitates or combines human nature, so the urge of selfishness or self-interest with the physical laws of nature, with thermodynamics, to actually make the system valid. So how is that working?
So without getting too much into detail, you can imagine it like each transaction is part of a block with a couple of hundreds of thousands other transactions. And this block then, I would say validated, you can argue about this term, but it's so-called validated by a miner. And this miner, he or she, what he does is typically getting into these transactions, and the selfishness element that you mentioned comes into play, where you obviously take the transaction with the highest transaction fees into your box, which is a block. Okay, the miner selects these transactions in accordance. Obviously, he's free to select these, but usually in accordance to the transaction fees. And the higher the fees, higher the likelihood that your transaction is in the next upcoming block. And this is how you can utilize the selfishness, if you want to call it that way, of the free market. Or you could argue the selfishness of the intrinsic value add of capitalism in general, which in this case is a free market, and probably the only free market we have in this world, because everything else is somehow broken and corrupted by regulation and other influences. And this selfishness is converted, that's the core idea of a capitalism or free market. The selfishness is converted into a value add for society. So your selfishness converted into the competition here is helping the society. In this case, helping the network, which is obviously the society. If society uses Bitcoin, then you obviously contributing to society, at least on a monetary scale. And this is part of the game theory. This is part of free markets or capitalism, if you want to call it that way. And this is an inherent part of the protocol that really makes sense for miners to contribute in the game. There are other incentives for miners as well, but I think this is the essence of how you really can assure that even despite being selfish, like you said, it turns out into something good.
Yeah, so it does result in collaboration actually in the end, which is also secured by the really high amount of energy that is put into the system and that is validating the system. So what's actually happening is that the incentive to be part of the system is a lot higher than the incentive to try to cheat the system, because then you actually would just have one transaction in your interest, but the rest of the group would actually go on with the older chain. Maybe you can talk a little bit about this, because this is really interesting to understand how much energy is put into the system is actually what makes it so secure. It's not a bug, it's a real feature why this whole thing is working.
Yeah, I'm glad you asked that, because this is really an important aspect, often understood wrong, right? So people often ask, can I corrupt the Bitcoin blockchain, or can I crack the Bitcoin encryption algorithms? This is not the real question here, because the question would be, does it make sense economically to break this encryption or to break any part of the chain, right? And this is like you teased already. No, it doesn't make sense, because think about it, if you would be able to do so, you would probably either result in a hard fork and you lose the value of your hacked chain, or if there wouldn't be a hard fork, you would completely devalue the newly earned money. Because let's say you have a 51% attack, which is one of the common consensus attacks. Okay, I gained the majority of mining power, more than 51% in the network. I can create it like a new blockchain. And you value the Bitcoin itself. When it comes to the question of a thermodynamically secured money system, the idea is actually not new. It's actually 100 years old. Henry Ford and also Nikola Tesla, they had the idea of having an energy money and how that could work. And it was actually the first time compiled and assembled in Bitcoin, is that you need some real form of a physical good, which is in this case energy, and attach that to transactions, which is, I would say, a real world reference, or maybe a real world underlying. Okay, you attach a transaction to. And in this particular case, in comparison to fiat, where you don't have any underlying, or you maybe have a reserve, okay, maybe the central bank has a reserve, but not an underlying of each transaction. And underlying is the wrong terminus here. What I mean is a reference is a better terminus in the real physical world. Like each transaction is connected to the real world in terms of energy. And energy is converted when is used for mining in the Bitcoin network. And this is a super important for the very simple reason. Only when you have a real conversion from a real asset and into the digital assets and vice versa, only then you have real digital money. And everything else It's just credit.
Yeah, so that's really interesting. And so it's bound actually to the physical world we live in, which is really fascinating how that works. And then I think in the beginning it was also called the time chain. So because
Yes.
it's not just linked to energy, to thermodynamics, to the laws of physics, but it actually uses the only common, not expandable criteria, which is time as we understand it, and fixes it to it. So maybe you can talk a little bit about this, because this is really, really fascinating how this works.
100%. And if you read the white paper of Satoshi carefully, you will notice that the terminus blockchain is not in there. There's only a chain of blocks. And Satoshi in his conversation always referred to the time chain. And why is that? Is that the core idea of having this chain of blocks is in a decentralized system to coordinate the time, because he was in the challenge, in the software development challenge, that it's in a really decentralized system, you certainly won't trust anyone with the time, because time is critical for order transaction. And if the order is critical, which is called path dependency, then it is super important that you have a unique, realistic time. But it must be, and this is the critical thing, you don't have one central time server. You can ask, you certainly don't want any time servers in the system, right? And how that is solved is by what Bitcoiners call tick-tock next block every 10 minutes, right? That every 10 minutes, or statistically every 10 minutes on average, you have a new block with the transaction in there. And it's ensured by the difficulty adjustment. It's ensured that this remains more or less around 10 minutes intervals, and hence the name time chain, right?
Yeah. So what you actually do is you create net entropy. So you create order in a system and you fix it to one constant. But in the other sense, it's egalitarian and permissionless, because in terms of energy, everybody can take part. So the energy part is expandable, endless, but the time part is fixed. So that's really a fascinating concept, I think. And
There's nothing comparable that we've seen so far in humankind. It's crazy. It's unbelievable. And I'm still in awe how this works in clockwork.
yeah, so nobody understands how anybody could conceptualize something like that. So I think Caesar actually, he guessed that it's an AI from the future, but that's fine. Yeah, so it's not corruptible because it's bound to the physical laws of nature, and it works in a system that everybody is more incentivized to actually to stick to the common plan, to keep the system up and running instead of following their own self-interest and cheating, because self-interest is aligned with the network. So that's fascinating. But how does it differ to other networks? Because there are other networks. The second largest is Ethereum, I think, still. What's the difference, and why does Michael Saylor say there is no second best?
Yeah. So when you compare that to like crypto dominance, where there's like 63, 64% in Bitcoin market cap, and there's, I think, only 7%, which is second largest, 7% in market cap of Ethereum. It could be 8%, but this is more or less the region that we see right now. And the thing is that coming from energy money, right? I don't want to mix up market cap with the concept of consensus and energy money. But important to understand that there's a reason why the second largest is only at 7% of the whole crypto market. The reason is very simple, because with proof of stake, and from migrated to proof of stake a while ago, there you have no thermodynamically insured money. You never can be sure whether the node next to you is really providing you with the real blockchain. How's that? Very simple. There is no thermodynamically insured blockchain because there was no effort necessary. If our viewers are not familiar with proof of stake, you simply throw a ball in accordance to who got the largest stake in ETH in this case, right? Or largest stake in this particular cryptocurrency. And this person, this node, this validator decides for the next transactions encapsulated in this block, okay? But you never can be sure that it was really calculated, because there was no proof of work. Only when you calculate the hashes out of proof of work, which is not useless energy spending. You can argue it costs too much energy. Okay, we can discuss that, but this is the idea of proof of work and hence the benefit also. It's not a bug, it's a feature that it actually requires this energy because the more value you capture in the system, the more energy is required to really ensure that. So it's actually not a bug and it's a feature, and this is not a problem. In growing societies, energy creation and also hence energy consumption is increasing. Look at the human history, it always increased over time. And it will further up to the point where we use the most energy ratio, the most of the energy in the whole solar system as much as possible, and which you can measure at the Kardashev scale. Physicians actually have on benchmarks how much energy is captured in a particular solar system. This is the point when it comes to proof of stake. You never can be sure that you operate really on the real blockchain. And this is it works very fast, of course. It works without much energy, but obviously it comes with the costs. You have to trust other people and you have to trust other nodes. And yeah, you can argue for the sake of efficiency. You want this centralization. Okay, fair point. But then it's certainly not a decentralized system anymore, right? This is the trade-off. And this is also why Bitcoin is evolved so far. And I think this can be reflected by the market cap. And this is also why Shayla says there's no second best, because yeah, there is no other hard money. There is simply no other hard money. So if you learn the consensus algorithm for a second, there is no capped money. Ethereum, for instance, is not hard capped, similar to mainly any other cryptocurrency, right? They don't have a hard cap. And even if they would have a hard cap, I think there's a ridiculous high hard cap in Cardano or something. This is a theoretical cap because the governance of the protocol is completely centralized, right? So what is the purpose of having a hard cap if you, with a small team of founders, can change this hard cap at any time?
Yeah. Yeah, absolutely. So going back to the first point, you actually do need a real decentralized system without any one centralized party who can act in their own interest, because we have seen that this went wrong many times in history, right? So
Yes.
that's a real difference.
Sooner or later, any centralization, may it be political, may it be financially, may it be economically, went south sooner or later. Because there's a single point of failure. It is not possible in a centralized system to maintain that forever.